Hey, what's going on? And welcome to the Financial Mirror. Once again, this is another live interview. There's been great feedback around the live interview, so I'm going to continue to try to push those out. And there was no one that I would have rather chosen to get a loan officer in here. We've been talking about houses, but now we get a loan officer in here that can actually talk about the financial part of sort of what goes into house buying. For the past couple weeks, we've gone through multiple different house buying series, from how much you can afford to how to pick the right home. There's been a ton we've gone over. We had a realtor come in for a previous interview, which went great. But now is the part that everyone has truly been waiting for. I want you to know, Quinn, this is what everyone's waiting for: is how do we pay for this thing? So there's a house. How do I pay for it? So Quinn, welcome. Welcome to the Financial Mirror. I'm glad to have you, man.
Yeah, hey man, absolutely. Thank you for having me. I'm excited to be here. Buying a home, everyone grows up looking to buy a home. It's the American dream, and I'm excited that I get to be a part of it, help families get into homes, and just educate people. So thank you for having me.
Absolutely. So one of the biggest things, and I've gone over this on a previous episode, and I wanted to make sure that when we jump into this, that we hit it up front, because I think that this is the one deterrent that most people have when it comes to home buying, and it's truly down payments. And I think that's something that so many people are I think actually terrified of how am I going to pay for this thing, and how am I going to get this down payment together? The question that I've got is sort of, from your perspective as a loan officer, sort of what are you looking for in a down payment, and what could the listeners, what should they be really thinking about when it comes to these down payments?
Yeah, so there's a lot of different options as it pertains to down payments and loan types. Okay. The biggest thing is a lender is going to want to source any money that is used for a down payment. So, like, um, if you have money in a bank account, if you have money in savings, retirement, if you're selling a vehicle, that's a way to potentially source for a down payment. So you have an asset you want to sell. And like I said, based on the loan types, if we're looking to do a conventional loan, uh, we have down payments as low as 3%, depending on qualifications. If we're doing an FHA loan, it's as low as 3.5% down. And then if you're in a rural area and you meet USDA guidelines, you could get a 100% loan, as well as if you're a veteran. It's Veterans Day, by the way.
There we
Thank you
go.
for the service. Thank you to all the veterans. But yes, if you're a veteran and you're eligible for a VA loan, that is also a 100% loan. Now, I say that those are the four main loan types. Okay, there are other programs out there, other 100% programs. A lot of them are state specific programs. Like, for instance, I'm in the state of Alabama, so we, as Cross Country Mortgage, the company that I work for, I'm employed by, we partner with the Alabama Housing and Finance Authority, and they offer a 100% loan. So, depending on the state, just do some research. If you're looking to buy a home, the down payment is going to be an issue. Just do a little research. Search, 100% down loan options, and just see what comes up. So there's options. You just got to look.
Right on. So, and like I said, I think that that's the one, I mean, probably the biggest deterrence. Everyone is scared of that down payment, and how am I going to come up with, you know, the 20% number that gets thrown out there. You're like, oh my goodness, how am I going to come up with 20%? But like you heard from him, there's multiple options out there. And is that something, is that sort of where at that point is can you start talking to a loan officer before you have ever started even looking at a house? I guess that's a question I have for you.
Yeah, absolutely. Honestly, that's the preferred method, right? Most people, they go to a real estate agent wanting to look at homes before they talk to a loan originator. And the best practice is, if you're not sure if this is your first time or if this is your 10th time buying, right? Get with a loan originator first. Let them look at your financial situation, complete a loan application, and see what you're actually, approved for, or not even just what you're approved for. What fits into your personal budget, right? We talk about personal finances. That's important. So before you go look at, that $500,000, $1 million home, it's in your best interest to check with your local lender first to see what that would look like.
Right on. So, I mean, I guess the question then leads to, how do you normally recommend a particular loan to a certain individual, depending on financial situation?
Man, that's a great question. So everyone has a unique financial situation, right? So the three big things that all lenders are going to look for is credit, income, and assets. Okay. So depending on where those three things lie, that would kind of depend on what type of loan product would be best for you. So, for example, if you have excellent credit, if you have a lot of money in the bank saved, you want to put at least a 20% down payment to avoid private mortgage insurance. You're more than likely going to go with a conventional loan.
Right.
Okay. Now, let's say you just started working on your credit, and let's say it's not quite as high as it will be in the future, or maybe you've had some life events that have caused it to be lower than you would like. And let's just say, for example, it's in the 600s. Okay, an FHA loan would probably suit you better for multiple reasons. One being that you'll get a better interest rate on an FHA loan with a lower credit score. It's a lower down payment, and the mortgage insurance, depending on your credit score, will more than likely, if it's in the 600s, will more than likely be cheaper than if you put let's say 3% down on a mortgage.
Right. So if someone is just now coming out of debt, like they just paid off all their debt, they're obviously their credit score has not reflected that they're now out of debt. Can they still buy a home?
Yeah, absolutely. Absolutely. First off, if you've been working to get out of debt and you're out of debt, congratulations.
That's right.
That obviously means you were on a plan, you had a plan, you stuck to the plan, and now you're out of debt. Now, by getting a mortgage, you're going back into debt, but hey, that's okay. It's a big expense, so we can look past that. But my biggest advantage is or my biggest tip to someone who has worked so hard to get out of debt would be, obviously try to look at homes at a price point that you could comfortably pay a 15-year note. Because by taking a 15-year note as opposed to a 30-year note, each month you make a payment, the majority of that payment is going to be applied to the principal loan balance, which means you're going to pay that quickly. Okay. So if you have that mindset, I would certainly recommend going with a 15-year mortgage.
So what would be another reason that someone may choose 15 or 30, or what would make a 30 better than a 15 in what circumstance? I guess, because I know that's a big question. It's out there.
Yeah, absolutely. So, we'll start off with a 15-year. We're just talking about it. So a 15-year, the pros is that you're going to get a better interest rate. Okay. Usually a 15-year versus a 30, you're going to be looking at ballpark a 1% better for your interest rate. So that's a pro. Like I said, each month you make your payment. You're only borrowing the money for 15 years as opposed to 30 years. So naturally, more of that payment is going to be applied to principal. Thus, you're going to pay the debt off quicker. And yeah, so I mean, those are the two main benefits. Okay, now the detriment would be it's going to have a little bit higher payment, right? So that's why we want to pick a home in a price point where we can still afford the higher 15-year payment, right? Now, conversely, with a 30-year loan, okay, it also has its advantages, right? So its advantages is going to be that it's going to have a lower payment, right? It's going to provide more flexibility. It also doesn't have a prepayment penalty. So you could technically get a 30-year fixed rate mortgage and pay it off in 15 years. And a lot of people like that about a 30-year mortgage because it does provide flexibility. And Some people look at it from the standpoint of, well, Quinn, this 15-year mortgage is $500 a month more than a 30-year mortgage. What if I took that $500 per month that I would be paying on this 15-year note and invest it over 30 years? Absolutely. Absolutely. That's a great way to look at it. If you're disciplined enough to do that, then yes, that you would come out better by doing that based on an average conservative 6% return, especially when mortgage rates are 3%, 3 to 4% right now for a 30-year loan. So,
wow.
Yeah, they've got they both have their pros and cons, and I think it just really depends on the person.
Right on. Yeah, and I think one of the and correct me if I'm wrong, but that 15, if you're doing the 30 and you're paying off the extra, all that's going to principal, right? I mean, wouldn't you say that would be about even as if you had done the 15, as long as you continue to pay that?
Yeah, absolutely.
Perfect.
So it does provide a lot more flexibility going with a 30-year mortgage. No question about it.
So if you had a stance on either one, obviously the you gave one huge point. People coming out of debt is holding themselves to paying off that mortgage faster with the 15. But which one do you see done the most? Is it the 30?
Yeah, absolutely. The 30-year mortgage is by far the most pick term mortgage because it does allow more flexibility and a lower payment. Absolutely.
Right. So I want that to move into talking about how when we started with this, you said going with a loan officer, a loan originator first is one of the the better approaches to home buying than starting with the realtor. My question is about, does the pre-qualified and the pre-approved those buzzwords that get thrown around, and obviously everyone's throwing them around now in this huge boom of home buying that we've seen, but with that pre-qualified, pre-approved, is that something that goes through you, or is that a realtor?
That is definitely through me, and they do get changed or discussed interchangeably, right? But they are not the same. When you get pre-qualified, so when you go and talk to a lender and they pre-qualify you, that is simply you completing a loan application. The lender looks at your credit. They look at what you currently owe. You tell them, hey, I make X amount per month, right? I have X amount saved in my bank account. And that lender then pre-qualifies you and says, yes, based on your credit score, based on what you told me, you are pre-qualified to purchase this home. Now, that works out most of the time. It does. However, it is better, if possible, if you can, to get what's called pre-approved. So when you get pre-approved, not only do you complete the application, but you also provide supporting documents for your income. You provide supporting documents for your assets. And so that includes bank statements, pay stubs, your driver's license, W-2s, tax returns, all that good stuff. And we take that information and we actually go and put it in front of an underwriter, right? And we say, hey, please look at this loan. And they review it based on the actual documentation we have rather than what you're just saying on a loan application, right? And so what it allows is that when you go to make an offer and you're pre-approved, you can, as a buyer in this competitive home market, you can put your best foot forward and have the best possible chances of getting your offer accepted over someone that you're competing with that may have been just pre-qualified, right? Because you're saying, hey, I've had an underwriter look at my documents and my loan application. I'm approved. We can buy this. And it gives the seller a lot of confidence, when making a decision on who to go with, for a buyer.
Yeah, I think that's a huge point that you made there. It's just the difference between the two. I mean, I think so many people they use them interchangeably. And just by how you explained it, that pre-qualified seems like it can be a little. You could definitely mislead the pre-qualified letter a little bit.
It can get a little dicey halfway through the process sometimes. But most it does work out. I think the biggest advantage is going to be, again, when you're making that offer. If you have a good loan officer that you're talking to, they're going to ask you lots of questions. So don't get offended, right? We didn't make the speed limit. We just have to pull you over if you go over. Right? It's just one of those things. Definitely, if you can, definitely try to get pre-approved. Ask your lender, hey, how can I get pre-approved, not just pre-qualified, right? And they'll definitely be able to, put you in the right direction.
So just hitting this off, is there a cost that goes with walking in and saying, hey, can I get pre-approved for this home?
There is no cost. Not with me anyway. But no, I think with most lenders, you're not going to incur any upfront cost, right? So why would you not, right? Why would you not walk in, sit down with a lender, or call, right? We're digital now. We can call, we can do things online, whatever you prefer to do. But definitely getting with a lender, and going over your financial situation and determining, what's going to be the best loan product, and how can I be pre-approved for that loan product and purchase price so I can go and then make an offer in a highly competitive market.
Very much so. And so when it comes to showing up, and you stated a lot of personal documents, a lot of personal information is getting thrown out there. What's some of those documents that listeners can prepare before they go and see a loan originator to actually ensure that that's a speedy process from both sides?
Absolutely. Well, I'll give you the conservative list really quick. Okay. All of these documents may not be required depending on your circumstances. But here would be a good list, right? 30 days worth of pay stubs, right? So if you get paid weekly, I would ask you to provide 5 pay stubs, right? Just to ensure we encompass a full 30 days. If you're paid biweekly, let's get 3 pay stubs, right? So bring in pay stubs that encompass a full 30 days. The second piece of documentation I would say is bank statements. Okay, a huge thing that happens a lot is when we request bank statements, the customer will only provide, let's say there's 7 pages on the bank statement. A lot of times they won't provide the 7th page because there's no relevant information, and they're like, oh, well, I didn't think you needed that. Well, we do, right? So the second piece would be to make sure you bring 2 months bank statements with all pages. So if it says page 1 of 7, bring all 7 pages and make sure it is the statement, right? Because there is bank statements and there's transaction histories. There's a difference, okay? So make sure it's a statement. Your bank, they'll send you a statement every month. It has all the identifying information that we need to do your loan, like your account number, your name, the statement period, all the deposits, withdrawals, et cetera, et cetera. So make sure you bring 2 months bank statements. The third piece of documentation, I will say your driver's license. You got to have a copy of your driver's license. The fourth piece would be most recent 2 years W-2s and tax returns. Okay, if you are a W-2 employee, you'll have W-2s. If you're self-employed, you will have tax returns. And sometimes you will have business tax returns. Okay, so make sure you provide complete, most recent 2 years W-2s, as well as personal tax returns and most recent 2 years business returns, complete federal returns, if applicable, when coming to talk with a loan officer. Those are the basics. I think if you can provide that, I think that's enough information to get a determination of whether or not you can be approved for that.
So that's a lot. That's a lot of personal information, and I think that brings up a solid point, and about obviously you working for cross country mortgage, and there's I can just throw the word mortgage out there, and 15 mortgage companies come to everyone's mind. So I think if you don't mind, just give people, the benefits of ensuring that they're working with a personable person that's looking at this stuff versus one of these online mortgage brokers that are out there that are lending money, via, very, very impersonal methods.
Yeah, no, I can't stress enough how important it is to speak with a local lender. Guys, look, when you're purchasing a home, it's a big deal. We're talking thousands, hundreds of thousands of dollars, right? Um, when you choose a local lender, if you go with someone like me and most other lenders like me, that's not online, that's not, at a uh, call center with their headset on taking calls, right? You got a person, someone who has your interest as your best interest. So you need to choose a local lender. They need to be knowledgeable. You can call them anytime, right? A lot of them will give you their cell phone number. If you work with me, I'll give you my cell phone number. And it's just really important. It's a big deal, right? So you wouldn't just call an online doctor and get them to diagnose you over the phone if it was serious, right? So it's important for sure.
Yeah, and so I think that's becoming as more things. I mean, you're seeing people buying cars online. You're seeing people do all this stuff online, and I just think it's very important. I mean, Quinn's done 2 loans for me in Alabama, so I can tell you can get a local lender and not be local to the area. So don't think you have to resort to an online lender just for the simple fact that, because I'm in Hawaii and he's in Alabama, he still did a loan for me. So it's not impossible to use a local lender, that you're getting their cell phone number, you're getting their personal information, and that you can work with them on an individual level versus, like you said, a call center. So I think those are some great points.
I'll say this too. There's lots of moving parts when you get a mortgage. Like you will see commercials say, click a button, get a mortgage. Guys, I wish it was that easy. It's not, right? It's a big deal. There's a lot of moving parts, lots of documentation. And so that just reinforces even more the need to work with, someone who is local or who has the knowledge of to help you, right?
100%. So when it comes to actually walking through the loan, and you're knocking out all those moving parts, and everything is progressing, what can people look at as being sort of an average processing time from start to finish of these mortgages?
Yeah, that's a great question. So, again, it depends on the scenario, depends on your financial situation. But you can expect to close a loan within 30 days, 30 days or less, right? I think that's a good time period. Um, I think currently at Cross Country Mortgage, our average turn time for closing loans is 25 total days. Okay. Now, if you call me up, you're like, hey, Quinn, I need to close this thing in like 12 days. We can make that happen too. Okay. But as a general rule of thumb, we're closing loans around 25 days, and you will find that most lenders will be between the 25 to 35 day mark, for closing loans.
So what's something that really moves you more to the slower side of that? What slows down that whole entire mortgage process the most?
Oh goodness, lots and lots of things slow down the mortgage process. Taking out new credit, guys. When you're buying a home, do not take out new credit. No credit cards. Don't buy any new vehicles. Anytime you take out new credit, we have to document the new payment. We have to get it added to your credit report. It can delay the closing. Another thing that can delay the closing is not getting your loan documents in on time. When we ask for it, you need to make it a priority to get it to the loan officer within reasonable time, right? We know you got to work. You've got, maybe have a family, maybe have kids, but just make it important, right? Because it is important. And so get those in on a timely manner. And, there's just so many things that could come up. Just lots and lots of things. But those are two of the things off the top of my head.
Right on. So everyone can see there's a lot that goes into loans. There's a lot that goes into home buying. There's a lot that goes into this whole, as he stated, American dream, right? Everyone wants to buy a home. Everyone wants to sort of go through that process. But there are a lot of moving parts, a lot of moving pieces that have to fall into place to make that happen. So in terms of what a buyer, what a future homeowner, customer to a loan originator, what are some of the key questions maybe that you see come up that really helps, or could really help a listener make sure that they're working with a solid loan originator?
Yeah, so you need to. I think some good questions would be to ask your loan originator what the bond market's doing currently, what the mortgage-backed bond market. That's what determines mortgage rates. Having a loan officer who's knowledgeable of the market, knows what's going on a daily basis, they're keeping up with it. I think that's important, right? Because then they can determine when is the best time to lock in your interest rate, and as well as help prevent you from paying more. Okay. I think asking about turn times. How quickly can you close this loan? I think that's important. Asking about, when can I contact you? What is your best contact? Is it an office phone or is it their cell phone? Right. I think that's important. Those are just a couple things. You need to make sure they work for a reputable company. Obviously, that's important. And it never hurts to look at a couple, right? You may talk to this person and maybe get some quotes from them and talk to another person and just kind of fill it out. Which one made you the most comfortable?
Right.
Which one provided the most value to you as a consumer? Those are great things to look for when deciding, who to look for or what to look for in a loan officer.
Perfect. So I think that this has been absolutely phenomenal. The wealth of knowledge, experience that you brought to the table. I mean, been doing this for years, right? I mean, it seems like time's slipping away since you started this journey, man. But yeah, it's all the experience, all the knowledge. It truly is beneficial, and I mean to everyone, including myself, right? I mean, it's always good to hear straight from a professional in the sense of home mortgages, because there's so much that goes into it, and you've got to talk to someone that's doing this daily, that's keeping up with the markets, that's keeping up with the current rules, regulations, how everything falls into place. All that's very important. So I truly appreciate you taking the time out to sort of give us and impart on us your knowledge and experiences, because it is a benefit to everyone.
Yeah, hey, absolutely. Thank you for having me. I've really enjoyed it. I just want to say, buying a home, it is a great thing. It's another tool to build wealth, guys. So definitely, I would make that a goal of yours if you haven't bought a home. Find a good lender, talk with them. You can do this, and yeah. So I appreciate you having me, and look forward to getting back on again soon.
Absolutely. So just for the listeners, everyone that tunes in and catches this, what are some of the services that you offer at Cross Country, and how can people reach out to you if they're ready to start a lending process? And I think it's very important here, in terms of let everyone know. Or do you just work in Alabama? Is that the thing?
So I'm currently licensed in 2 states. That's Alabama and Georgia. So, but Cross Country Mortgage is a really big company, closed $44 billion in loans last year. They're in all 50 states. So if you are looking to purchase a home in a state that I'm not licensed in, you can still contact me, and I can put you in touch with a reputable, good loan officer that can look at your scenario and take great care of it. But as far as that, ways to reach me, you can reach me by phone. My phone number is 470-250-2278. Or you can reach me by my email, which is Quinn, Quinn, Harrelson, Harrelson, @myccmortgage.com. So look forward to answering any questions you guys might have. If you need anything, reach out. Feel free to reach out anytime.
Absolutely. And if you missed that, it will be his email will be in the description. So you can always just go down to the description box, click that, and pop up and email him any kind of questions or future if you're about to buy a home, getting ready, if you have questions or like he said, need to get paired up with a lender, he's got you. He'll put you with a loan originator to help you out. Quinn, thank you. I truly appreciate it. Absolutely, we'll get you back on here. We'll always make the time. But once again, thank you for coming on today.
Hey, thank you.
Hey, and if you're listening to this on a podcast, please don't forget to comment, subscribe, leave a 5-star review. It's always beneficial. And if you do need a financial coach, if you need someone to sit down with you and help you out with your personal finances, please reach out to me. You can go to thefinancialmirror.org/contact. Fill out that fancy little contact form. It'll shoot you right into my DMs, and I will make sure that I get in contact with you and we'll work something out. Thank you, Quinn, once again. Appreciate it.
All right. Thank you so much.
Till next time. Peace.